think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. This channel focuses on changing financial trajectories and building legacies, and uranium is a way for us to do that. Today we have the pleasure of speaking with Justin Huhn of the Uranium Insider. He has been a blessing to the channel. He has been on multiple times, and today we're going to talk with him about some of the legislation that has been passed, and we're going to look at some of the uranium equities and how they are playing out with the spot price over $80 a pound. So be sure to hit the subscribe button, hit the like button so that this video gets out to more people. And without further ado, let's get to the interview. Hey Justin, good to have you back on the channel.
Good to be back, Daryl. Thanks for having me. How are you?
Oh man, doing good. Just getting over these little sickness bugs and everything, but you know, the show goes on, right?
Yeah, absolutely. It has to.
Definitely. So there's been a lot of news coming out in uranium that I want to jump into today. I'm just going to share a screen because you know, these news articles that I've been coming across have been pretty interesting. So I want to just let me go ahead and pop the screen up. Boom. All right. So the first thing that I've been seeing is that the House has passed a bill to ban Russian uranium imports. They did imports, but they did have a caveat there, you know, and so like when you go to the article, this is kind of where I read between the fine lines, where it says it will make it illegal to import low enriched uranium, which is used in nuclear fuel, 90 days after the bill becomes law. And then it says it allows for prohibition to be waived. However, if there aren't other viable sources of uranium to sustain nuclear reactors. So,
right.
So it's kind of interesting, you know, they want to be ambitious to ban the imports of something that we need, but they're also putting in like this contingency, you know, on it being waived. What's your thoughts on that?
Yeah, so that's the waivers are basically there with an expiration. The waivers will only go out to December 31st, 2027. So for 4 years, essentially. But the waivers are there just to basically say that we're not going to, the United States government is not going to cut off these imports cold turkey if you as a nuclear utility cannot find enriched uranium elsewhere. So if you're a U.S. utility, you have a contract that you signed with 10X, with the Russian enrichers, 2-3 years back, and that's to be delivered next year. And this ban passes, and you go out into the market to try to source uranium outside of Russia, and you can't find it in the time frame or potentially at pricing that won't be detrimental to your operations, then you can petition to the Secretary of Energy to have a waiver for this and still receive the material from Russia. So it's setting a firm deadline. So this is done. Uranium imports are done in 2028 and beyond. No more. Right now, Russian imported uranium is limited by the Russian suspension agreement. It's about 25% of the total demand in the United States can be filled by Russian entities, and it goes based on individual U.S. utilities. So yes, there are waivers if it passes. It hasn't passed yet, so it's passed the House. It's supposedly going through the Senate. They were trying to fast track it, which means that all 100 senators would have to be on board. There was one senator, Senator Cruz from Texas, who blocked it, supposedly based on reasons unrelated to the ban itself. He probably wanted to stuff something else into the bill to, you know, for his constituency, as politicians do. But either way, fast track, no fast track, it might just go to a regular Senate vote. Probably won't happen this year. Maybe the beginning of 2024. We'll see. A couple of things that are really interesting in the past couple of days that have come up. One is that there was a report by R.A. Natter on Bloomberg that stated that 10X, which is the Russian enrichment company, had been warning to their U.S. customers that if this ban goes through, it's possible that the Russian Federation will force them to stop exporting. So these Russian entities, they're not going to want to actually cut off and break their contracts. They want to be seen as reliable producers. The Russians have not missed a delivery ever. And so they're not about to, in my opinion, not about to say, okay, well, you guys are passing this ban legislation. I don't think they're going to say, you know, we're done. We're not going to send it any longer. I think they're going to honor the contracts as long as they can. With that said, if we actually see it come from on high, you know, from Putin essentially, that says, yeah, they're wanting to ban our material, screw it, let's just not send it to them anymore. I don't think that's going to happen, but it is possible. If that happens, we're going to see a massive response in the market. I think we're going to see the market basically break, and we're going to see huge price increases across the fuel cycle. Even though we're mainly talking about enriched uranium being delivered, that has an effect across the market. So the enrichment, the demand and the price of enrichment does directly affect the demand and the price of uranium, but not the other way around. So uranium can do its own thing and spike to whatever prices, and it won't necessarily affect conversion and enrichment. But if conversion and enrichment, especially enrichment, price goes up, demand goes up, price of uranium goes up, because it's the cost of the feed that goes into that enrichment process. So there's a lot there to this. We don't need Russian material to be banned. I mean, the supply side is already so constrained. Look at where we're at in price right now, almost $85 a pound currently. It's up 70, almost probably close to 75% this year to date. Uranium is huge move for the commodity this year. 2024 is going to be nuts. We don't need this ban, but I do think the ban is going to pass. The Defense Authorization Act, or the National Defense Budget, was also passed just yesterday, I believe, that does have funding in it to support the nuclear fuel supply chain. And additionally, I believe funding to support utilities that might be impacted by this ban. And if some of the senators were holding out on supporting it until they knew that there would be funding there. Looks like the funding is there. It most likely is going to pass the Senate, get the president's signature, and be law. How much that's going to affect the market, I don't really know, even though it passed the House and has the support of major nuclear advocacy organizations and the big utilities in the United States. It actually has the support of them. Even though it has waivers, we're still seeing a response in the market. You know, ever since the end of last week, when we actually heard that this major organization that advocates for the nuclear utilities in the United States was suggesting a yes vote, we saw the market react to that. Spot price of uranium is about $4 since then, on very thin trading. So it's a very constrained market. And if this ban passes, and especially if Russia retaliates and doesn't send the material, all bets are off on what happens to the price. But we don't need it to happen. We're going to have a pretty stellar year next year anyways.
Yeah. Yeah. Yeah, because it's kind of interesting. Like, you know, we saw this article come out that said Russia was going to ban it, but then, you know, there was other articles that kind of retracted that statement, which I'm going to pull up here just a second. So there seems to be some pretty much, I mean, just like discrepancies on what Russia is wanting to do. I mean, here it says they refute the reports about suspension of uranium supplies to the U.S. I don't know if that's a strategic move or you know, if they're just saying that or what, but this information got out from somewhere, right? I mean, someone got this from somewhere, unless someone just, their imagination just made it up, you know?
Yeah, no, it was reported by Bloomberg that 10X was warning the U.S. utilities that Russia could ban the exports if the House bill passes the Senate and it goes into law, that they could retaliate and basically, you know, you can't fire me, I quit. But Rosatom is coming back and saying, no, this isn't going to happen. So it's hard to say exactly what's going on. It certainly is possible that was posturing coming from 10X with those warnings, trying to influence the utilities to get the bill killed. But I don't think it's going to happen. I think the ban is going to pass in the United States ultimately, because everything is there now, and the Department of Energy and the U.S. federal government, the Biden admin, is super, super supportive of nuclear. And there's a lot in this defense budget. There's a lot of support coming forward for the nuclear fuel supply chain in the United States. It seems like they're serious about getting it shored up and therefore making it possible to step away from Russia on this timeline. So we'll see. We'll see how it plays out.
So what is needed in terms of so back in October, which this information kind of slid under my radar, we approved a project to start having enriched uranium here in, I think it was in Ohio, and uh, like obviously Russia controls a lot of the enriched uranium, the market for that. And so, how much infrastructure do we need to even be able to be sufficient in having our own supply?
Sure. Now, the Ohio news was probably Centrus turning on their HALEU circuit to produce high assay, low enriched uranium for advanced reactors, small modular reactors. So there's essentially very little enrichment capacity in the United States. We do have a conversion that's essentially sufficient for the United States needs at Converdyne's Metropolis plant that just turned back online this year. But of course, they're a global provider. They sell conversion and UF6 into the global marketplace. They're not solely, converting and producing UF6 for the United States fleet. But as far as enrichment goes, we don't have a lot of enrichment. All there is Centrus, and it has a relatively small amount of SWU. Urenco does have a plant in New Mexico, but they're owned by the UK. So domestic enrichment, the way that it seems like the US is going to be supporting it is going to be putting out RFPs. Now, this has not come yet. I think it's going to come, and possibly even in the last 2 weeks of this year, an RFP for enrichment. And that will be fulfilled most likely by multiple players. One of them would be Centrus. The other one probably will be GLE, the Global Laser Enrichment, which is owned by Silex and Cameco. They're setting up a pilot plant currently, and soon to be in process of building a full-scale commercial production facility in Kentucky. And that will be some enrichment on like a 5-year time frame. But there's a lot of work to be done to build out more enrichment in the United States. So it's a slow process. We are hearing that Urenco is expanding enrichment in both New Mexico and in the Netherlands. So that's a good thing to hear. Orano, I believe, is also expanding some enrichment and conversion. So the Western market is definitely working towards that expansion, in addition to the United States trying to support its own enrichment as well.
Yeah, it seems like like we have this plan in play for the West. I mean, to bring more enrichment and build more infrastructure in these other nations and things of that nature. But it's kind of weird that we would show our cards, this early in the game, when in pretty much risk like the price of uranium just spiking very high if Russia or Putin does come back and say, hey, we're just going to cut the cord. So that's kind of interesting that we would reveal our cards that quick.
Yeah, it's kind of been a long time coming in terms of finally dealing with this national security issue, which is having almost 20% of the electricity grid in the country being utterly reliant on foreign sources of fuel. We have plenty of uranium in the ground in the United States. Like I said, we have conversion, we have fuel fabrication. We just need more uranium mining and more enrichment. And then we'll have a secure domestic fuel cycle. But I think that it's a global marketplace, and it's functioned for the most part decently for decades. And even now, with the potential cutting off of Russian material, and in a large case, voluntarily cutting off of new contracts with Russia, which a lot of the most Western utilities haven't engaged in new business with Russia since the war started. So it's already moving in that direction, but there's a lot of reliance on the global players and reliance on global allies. So even though the United States doesn't have, uranium and enrichment shored up here, they have good relationships with Urenco and Orano, which is French-based, good relationships with Canada, good relationships with Namibia and Australia. So there's plenty of fuel to go around in the West. It's just that it can't respond to that shifting demand very quickly. It takes years and billions of dollars to expand enrichment, expand conversion, and to expand uranium mining. And that's just not going to respond fast enough to the demand that's there and the increased demand that's coming.
Gotcha. Okay, well, I do want to transition here to some of the charts for uranium. We're seeing here that the uranium's at about 80, 84, $85 a pound. Some of the equities are not keeping up with the. I mean, this is just this increase here. I mean, this has just been ripping, the whole year. And then I've looked at URNM. It's kind of settled off. It hasn't really responded to the price of uranium. We do see that the physical trusts, I mean, they seem to be responding to the actual prices of uranium. That's sput and then yellow cake. So what are you seeing with the uranium equities versus like the physical trusts in response to the price of uranium? Because if we look at Energy Fuels, which I mean, a lot of people on Twitter have been upset about about this one. It has not been keeping up with the price of uranium at all.
Yeah, well, there's a lot of nuance depending on which individual company we're talking about, but it makes sense that the physical funds and the physical trusts are generally tracking the commodity. Even at a discount to NAV, they're going to be dragged up by the movement in the price of the commodity. So to see Yellow Cake and the Sprott Physical Uranium Trust move up in the way that they have, it's just been following the commodity, and that makes total sense. There's been a few standout equities, primarily the large caps. So Cameco and NextGen, Kazatomprom had a big move today. These large caps have been moving more than the small caps and the mid caps. As far as I'm concerned, to me, that tells me that's institutional positioning and quote unquote smart money positioning, because you can only pull so many levers if you have liquidity requirements. If you are managing multiple hundreds of millions, if not billions, and you want to take a 1 or 2% position in uranium, you've got 5 things you can buy. You can buy the ETFs, you can buy SPUT, you can buy Cameco, you can buy UEC, you can buy NextGen, maybe a couple of others. So, and Cameco is the clear and obvious because it's so kind of front and center with their Westinghouse acquisition and liquidity. Liquidity drives everything for institutional investors. So to us, what we think we're seeing is institutional positioning and quote unquote smart money positioning. And that usually happens before big moves. So they're usually the first to move. They get it. They're playing for the long term and they're going for liquidity. Now, that's my interpretation. Looking at uranium miners relative to the price of the metal, they are historically very, very cheap. We think that that changes in 2024, and we're going to see the small and the mid caps and the ETF flows come back in a big way. And we're going to see outsized returns for the miners compared to the metal, and especially compared to the large caps that have outperformed up to this stage. So that's what we're expecting going forward here.
Yep, gotcha. Yeah, because I mean, some people they're upset that their stocks aren't moving up. Which I was in Energy Fuels, and I'm just like, yeah, it's trading in this range. It's not really doing anything versus like a UEC. UEC has been on the tear for the year.
Right.
And
UEC is the most liquid stock in the uranium space. So that explains that price move. It's just liquidity. Energy Fuels has largely been focusing on rare earth metals. So that's probably something that's hurt them with this move in uranium. But, looking at the overall general equities sentiment, even with the S&P climbing a wall of worry, everybody is saying recession is here and recession is coming. Everybody is saying we're going to see a liquidity crisis and a stock market crash. I mean, it's almost universal, that sentiment. And I'm not saying it's not going to happen, but that sentiment, primarily, in my opinion, is affecting the retail investment side of things. And retail is what buys the ETFs and buys the small and mid caps. The institutional investors are usually more sophisticated and are playing the theme by going after the high cap, larger cap liquid stocks. And like I said, I think that trend shifts, and historically it does shift. Right about at this price, inflation adjusted, is where this shifted in the last bull market. Not to say it happens again right on time, but we do think we're going to see a rotation, and we'll see on balance a larger percentage of flows come in via retail and go into these small and mid caps and move that portion of the market significantly in this next year.
And I had an interview I did recently where we went through institutions coming in and buying uranium, and how the previous run up we had in 2021, early 2022, that was mostly driven by retail, and so now we're seeing like some shifts in that dynamic, and so that makes total sense. There's been some talk about Niger and I think it's GLO out of GLO Global Atomic, right?
Yep.
And so what's happening there? I saw some brief news headlines on that, and just wanted to see if you had any information on that.
Yeah, it's been quite a mess. Honestly, on multiple fronts for the company this year. Earlier this year, they had a financing interrupted by an NGO suing them for something that ended up just getting completely thrown out by the federal court. But a few months after that, this was in July of this year, there was a military coup where the existing administration was basically forcibly removed from power, and the president, to my knowledge, is still being held captive by this military junta. That shook everything up in the country. Global Atomic had basically their financing that they needed to get done with debt financing through the banks was interrupted because of this coup. And finally, it's looking like it's starting to settle down a little bit. But in the meantime, since that coup happened, a couple of things happened. Not only did it slow down progress for Global Atomic in developing DASA, which is a high-grade mine, and basically the only large high-grade mine, undeveloped mine in Africa. It's much different. It's an underground high-grade mine, whereas the uranium mines in Namibia are big, open pit, very low grades. So this is an amazing deposit, and it's going to be a mine, but this certainly shook things up for them. The other thing that it did is they basically kicked the French out of the country. The French pulled their embassy, the French pulled their military, and Orano, that's operating still in Niger and has been operating there for almost 50 years. Their operation at Sommer, excuse me, so it was interrupted. They have not been able to get reagents across the border, so they had to actually stop last month, stop producing uranium. So and Orano needs pounds, because they're getting their uranium from Niger, from joint ventures with Cameco in Saskatchewan, and from joint ventures with Kazatomprom. And all of those, Kazatomprom production has been slightly down. Cigar and MacArthur have not quite hit their production targets, and now this in Niger. So Orano is in a situation where they need production to happen, and this has certainly been an interruption for them. So it's looking like it's moving in the right direction. Like I said, DASA will be a mine at some point. It's absolutely needed, so it's going to happen. But this certainly didn't help the supply story.
Yeah, gotcha. So quick question on that. I'm just looking at the chart for Global Atomic now. And for me, like when I heard about the news of I mean, it sold off significantly. I mean, went to what, it touched at $1.25 or so a share, and then now it's trading at $2.63. So it's doubled since then. Um, so were you kind of like risk off with this? Like, so some people, like, they go into crisis investing, like they'll say like, hey, this is sold off significantly, it's probably overblown, blah blah blah. Let me go ahead and buy some shares because the reward outweighs the risk. What was kind of your sentiment, or were you kind of like, hey, I'm not touching that?
I think the jurisdiction has to be looked at closely. I think that this is a unique situation where it's obviously an unstable country, but it also has a long history of uranium production. So it's risky on one side of things, and it's very stable, and ideally, you can assume that production will continue in the country because it has for such a long period of time. Really, I mean, looking at the stock now, it obviously is still pricing in some level of jurisdictional discount. So I think as this situation normalizes in Niger, which hopefully it will, you should see a pretty substantial re-rating for this company. If you look at relative valuations to peers, it's trading at an extreme discount. So clearly the market is still giving it a jurisdictional discount, but I think that re-rates as soon as things stabilize there, and I think that they will.
Yeah. The jurisdictional. I mean, even for me as an investor in natural resources, jurisdictional risk matters a lot. I had recently jumped into this isn't a uranium company, but Franco Nevada. They sold off from 140 $60 a share to 103 the other day. It hit $103, and for me, I mean, it's a gold royalty and streaming company, which is it's the best out there. And so I felt like the reward outweighs the risk, but they did have some jurisdictional risk in Panama, where they had some issues with the government and the workers or something of that nature. And pretty much people got out of it.
Yep. There's most of the time, I mean, just generally speaking in investing, when sentiment is hot and the sector is running, valuations will overshoot to the upside, and the opposite happens on the downside. So most of the time in downtrends, stocks will get oversold beyond what their fair value or whatever you might look at. So it's just how the markets work. The swings, especially in mining stocks, the swings can be very violent, very extreme, which scares off a lot of investors, but attracts a lot of investors as well. A lot of people like that volatility. If you play it intelligently and you can stomach it, the rewards can be pretty handsome.
Yeah, exactly. So, what's happening at Uranium Insider? You recently released one of the webcasts or webinars that you put on with a couple of people that were in the interview. I started watching it. I need to finish it. But what else is happening at Uranium Insider?
We've got a couple of things cooking, but yeah, we had never released a recording of our members' webinars. So we do these members' webinars every month, and we have very in-depth conversations with special guests. Usually they're industry representatives, sometimes they're company CEOs, and we were so blown away by this conversation that we had with Nick Lawson and Ben Feingold from Ocean Wall that we decided to cut out the member Q&A and the positioning discussion, because obviously we're not going to share that publicly, and just include the macro discussion that we had with these guys. And it was very, very well received. These guys have done very deep work, especially on Central Asia and production out of Kazakhstan and Uzbekistan. So they know that very, very well. And they're as bullish as anybody. I mean, they think that this is a generational wealth event, and I completely agree. I still speak with these guys, not on a daily basis, but at least on a weekly basis. And we're collectively coming to a similar sort of stance on this market, which is just the supply is broken. It's just broken. I mean, it's not going to be able to respond, and the price is going to go nuts. I have no idea where it's going to go, but I really think that 2024 is going to be a huge year for uranium and uranium equities. What else is happening at Uranium Insider? Well, we did last week, or no, that was this week, excuse me, earlier this week. We had like an extra bonus webinar that we just kind of pulled out of nowhere for our membership, where we discussed with some market technician kind of experts and looked at charts, long-term charts, ratioed charts, at it with a completely unbiased, objective, technical outlook. And that was great. We really appreciated them coming on. And we have another members webinar next week with an industry exec. This person nailed the spot price projection. He said during the summertime we could see 80s by the end of the year. Can't wait to talk to him. He's been in the market for 40 plus years. So looking forward to that conversation. That'll be out for our members. We're doing that next week. And we've got a couple of things cooking for 2024, but I can't really speak on those yet. So we're plugging away. This is all that we do. It's all uranium all the time. And we've got a great team. And so it's looking really constructive going forward for sure.
All right. Well, you all heard it from the man himself. Be sure to go over to uraniuminsider.com. check out those webinars, as well as consider signing up to become a member of Uranium Insider, as Justin is providing value to many people that are interested in this particular sector. Sorry, y'all, just keep fumbling over my words because I'm getting over this stuff, but my brain's a little foggy. But I appreciate you for coming on, Justin.
It's my pleasure.
Looking forward to chatting again.
Thanks for having me, Daryl. Good to see you. Hope you feel better.